Hi friends, welcome to A to Z Learning channel. Today we are starting our new segment which is meant for student, and as part of this segment we are picking up the topic of basics of financial education for students. So this is going to be various part series that we will run. Every week we will come up with a new video picking up some of the basic concepts of financial education which are largely targeting our student populations. So we hope you like our new series. We would really look forward to your comments, and if you like our content of this video, this series, then please do press like button and share this with your friends and family. So without a further delay, let's start our today's video. As I said, this is part of the basics of financial education, and today's topic is what is banking. We all are exposed to banks and banking industry these days, but from a student's perspective, there is still kind of understanding gap in terms of what do actually banks do, how they make money, what is their income, what is their cost, how do they make profit, how do they kind of incur losses. So in this video, we will help you understand the basics of banking, how they make money, and what is the interaction people have with the banking. As the nature of this video suggests, it's going to be a basic video, so it won't deal with some of the complex and complicated aspects of the modern day banking, but the basics of banking we will help you understand in this video in a very simple and easy to follow manner. So let's start. So first of all, let's understand what is a bank. Bank is a financial institution licensed to receive deposits and make loans. So first of all, the definition wise, it's an institution. It's a financial institution because it is dealing with the financial transaction. They are always licensed, so you can't just tomorrow decide that, okay, I want to open a bank. It's not like a grocery shop that tomorrow you decide to open a grocery shop and you simply find a place and open your shop. No, you need to be licensed. You need to apply to be able to run a bank, to be able to open a bank. So bank therefore is a financial institution which is licensed, and they are licensed to do basically two main activities. First part of their activity is to receive deposits, and the second part of their activity is to make loans. Okay, receive deposits and make loans. In the first part, let's understand what is deposit. So people like you and me, we do maybe working for a company, maybe we are employed by a shop, and we are providing services to that company or shop, and therefore on a monthly basis or weekly basis or daily basis, we earn some income. Similarly, we could be running a business where we kind of earn some income. So whatever amount that we earn as by providing our services or by selling the product that we have, we make a income. We earn an income. That income we use to spend and pay for the cost, pay for the charges that we need to pay for. For example, we may have a house on rent, we may have food bills to pay, we may have electricity bills to pay, we may have maintenance bills to pay, we may have petrol charges to pay. So we have got number of expenses that we incur. So our income, when you kind of spend whatever you have to spend, if there is any amount that is left from, so if your income is 100 and your expenses are say 80, you will have 20 still left, and that 20 will be called your savings. And there are two ways you can manage your saving. First of all, you could keep that saving with you in your wallet or in your drawer or in your safe, and it will remain 20. But what banks do is, from a people like you and me, if we have any saving, they want that saving to be deposited to them. So when you put your saving with the bank in a bank, then it becomes a deposit. So they are receiving deposit. So that's the first role of the bank. So where do they receive their deposit from? They receive from people like you and me who have got some saving. So instead of keeping that saving in our house, we keep that in the bank. Why do we do that? Because banks in return give us some extra income on that saving. So if you're keeping say 20 with the bank will give some income on that 20. So you will earn something on that 20. But if you keep that 20 in the house, you will not earn anything. This earning that you get from the bank by keeping saving in the with the bank is called interest. So banks pay interest on the amount that people keep with them, which is called deposit. So amount that you and I keep with the bank is called deposit, and on the deposits banks pay interest, which is your income. So interest is your income, but it is the cost to the bank. So whatever bank is receiving as a money, which is a deposit, on that banks pay interest, and that is the cost of receiving those deposits for a bank. Okay, hope you have understood. Now the next part is what is loan? So, so banks have now received the deposits from the, what do banks do with that money? So banks have got this money. Banks will look for people who need some money, to do various transactions. For example, you may want to buy a car, and you may have only say car is 1000 rupees, but you have got only 500. So there is one way that you can continue to wait and continue to save until you have got the full 1000 rupees and then buy the car, which could take 1 year, 2 years, or whatever. But other option could be that you have got 500, car costs you 1000 rupees. So the balance 500 you can borrow from the bank. And when you borrow the money from the bank is doing nothing but making the loans to you. So you take that money, because you're taking that money from the bank now, you'll have to pay something back. What is that? You'll have to pay interest to the bank. So that is that interest that they that you and I pay to the bank is called bank's income. Okay, so on the deposits, the money that we keep with the bank, banks pay us interest, which is our income and bank's cost. The money that we borrow from the bank, we pay the interest to the bank, which is our cost and bank's income. So that's how banks get their income and cost. Hope it is making sense. And then the last question is basically, what is banks profit? How do banks make money? How do banks make profit or loss? So if banks income is more than their cost, so banks cost is the money that they are paying on the deposit, and income is the money that they are earning on the loans. So if their income is higher than cost, they will make profit. If their cost is higher than income, they will make loss. So that's how, in a very simple term, the banks operate. So two main activities, just to recap, two main activities of the bank. They receive deposits from people like you and me, and they give loans to people like you and me. So on the money that they give loan, they earn income, which is the interest received. On the deposit, they pay interest, which is their cost. So as long as their income is higher than cost, they will make profit. I hope this simple explanation of how banking works is helpful. We would look forward to your comments and any suggestion that you may have. And if you have liked the content of this video, then we would really urge you to please press the like button and share it with your friends and family. Thank you so much for watching and giving us the time today. And if you've not subscribed our channel A to Z Learning as yet, we would urge you to please subscribe our channel A to Z Learning and become part of our viewers family. Thank you so much and have a good day.